Hello, I'm Sam Boor, Head of Sports M&A Advisory and Transaction Support at Deloitte.
And I'm Theo Ajadi, managing the Sports M&A Advisory and Transaction Support at Deloitte.
We're here to bring you up to speed on the 2023 outlook for the M&A sports market.
Overall, in 2022, investors showed strong interest in sports with around 200 M&A transactions completed across the industry in the first 10 months of the year.
Around 10% of these transactions involve larger entities, such as competitions, leagues, and governing bodies, while about 40% of transactions related to individual teams or clubs.
We've seen high investor interest in sports teams, leagues, governing bodies, rights holders, and sports technology in particular. We expect that these areas will continue to provide a breadth of investment opportunities in the coming months.
It is evident that as each year passes, sport is increasingly considered an asset class that is too large for institutional investors to ignore. But with so many sports and types of organisations, it is not a straightforward sector to execute in.
So what's driving market activity?
We're seeing a growing M&A market with strong tailwinds and a proliferation of liquid, sophisticated pools of capital. To put it simply, investor interest in sports is at an all-time high, and organisations across the industry are turning to private capital to fund their next phase of growth.
A number of high-profile transactions have taken place in recent months, and we're likely to see a wave of investment into premium properties still to come. Assets across the sports industry are offering investors a low-risk profile and more substantial overall commercial revenue. And where has the interest been coming from?
Just over half of sport M&A transactions in 2022 have involved European sports organisations, compared to around a quarter which have involved US-based assets. And while Europe may have seen a greater volume of sport M&A, US organisations have executed higher value deals. Twice as many deals were made in larger US sports entities, such as competitions, leagues, and governing bodies, in comparison to larger European organisations.
However, 80% of team-level deals were made in Europe, and we've seen that US investment into European football clubs has been a key focus. Over 2/3 of investments into the Big Five leagues over the past 5 years have come from the US. Much of this activity has been driven by investors' belief that European clubs are undervalued commercially. So, what will happen in the next year?
In the coming months, we expect to see investors continuing to consolidate assets into complementary portfolios. Women's sports will likely provide a compelling growth opportunity.
As more capital flows into the sports sector, sustainable investment models that balance financial and operational viability with on-pitch spending are front and centre and gaining traction.
There's a crucial need for responsible investment and governance in sports. Investors must enter the sector in a conscious and risk-focused manner, considering all the factors that may impact their future ability to be responsible custodians of sport.
If you would like to find out more, please do get in touch.